All right, what's up, everybody? Good morning. Welcome to this Tuesday stream that's being done on Wednesday. How's everybody doing on this fantastic Wednesday? Sorry for yesterday. Just couldn't get the internet working that great. Didn't feel good. So we just decided to carry it on till today, which is fine because really and truly nothing kind of happened yesterday. I mean, in Bitcoin it did, but across other things, we really didn't get anything. A lot of the major moves that happened on Friday and Wednesday, that trend has continued, but the daily ranges have been small. Bitcoin traded down to daily support, which is the same daily support that has virtually held every single candle's range since it was put in at 34,493. 35,000 is a big figure number, but with Bitcoin, it really doesn't have much sway. You could see there was some wicks right through there, but we did finally got a daily close above those wicks, which is good. Also a daily close above monthly support, but then we pulled back. We pulled back pretty deep. We pulled back to a demand zone, roughly around 34,147, and then Bitcoin has continued to climb. Now, yesterday, it tested and then moved to the upside. Intraday, it looks like that. So there was time to buy. There was time to buy in here. This is 7 o'clock in the morning, 8 o'clock. This is all Eastern Standard Time, New York City time. 9 o'clock right there, 10, 11. You had plenty of time to be a buyer there. Stop below the daily low if you think Bitcoin's going to go higher. Excuse me. If you think Bitcoin's going to go lower because it's created bearish divergence on the daily and it's creating an ascending wedge, which is typically looked at breakdown potential, then obviously you want to look to short daily res. All right. I mean, that's literally it. On this big day yesterday, we notice that A, you didn't take out last week's high, and B, you closed below daily res. So this is the area that you are looking for potential shorts. There is nothing up there as far as resistance goes except intraday. And something is happening. It has stuck. There you go. Jesus. All right, so moving forward, you can see that there's a swing high right here that took 4 or 5 hours to build in, and then you dropped. That is currently where we are. That is also daily res. But notice as far as like, there's an hourly res, there's an hourly res. There's nothing else up there to short off of as far as a level, an objective level, not a subjective one. Now, monthly resistance or monthly support, sorry, is this line right through here. This is the major line, the key line that we were watching. Because if we start to trade away from this with like a bearish fury, then I'm gonna assume that basically what happened was we just back tested monthly support as the breakdown, and then we have, we're moving lower potentially to fill the gap down at 20K. All right. If you are not familiar with that gap, it is on the CME Futures, because Bitcoin, this spot crypto, trades 24/7. Therefore, there cannot be any gaps. So technically, spot price has already traded in that area. But since you get closes on the CME, you get gaps. And this is the gap I'm referring to. It is literally the last unfilled gap on this entire chart, minus the $115 wide gap down at $9,000. All right. I don't think it's ever going back down to $9,000, but it could, obviously. All right. So you got to keep that in mind. With no upside or no topside gaps to fill, since they're already all filled, there really is no need for price to go up there. Now, a lot of talk about inefficiencies and things like that, but generally those people that are talking about inefficiencies don't really understand how price works. All right, price doesn't work like that. If price leaves an area, it leaves the area because of supply, right? Demand. That's what moves the market up and down. It has nothing to do with anything else. No technical analysis. When we use technical analysis, we're just basing it off of objective levels. That's to simplify the analysis, right? I don't want to get long until this price gets tagged, or I don't want to get short until this price gets tagged. Something like that. It gives you an objective area to look where you want to put on some risk. Obviously, becoming profitable in trading is all about managing that risk, making sure that your losers are consistent and smaller than your winners. And this is a good way for you to do that if you are a new trader. So that way you don't have to learn about crazy bat patterns and stuff like that, or how to do a very subjective Elliott wave theory or any other of that subjective stuff. So this is just a way to keep things pretty legit. So right now there isn't anything to do on Bitcoin except for a potential short, looking for that ascending wedge to break down. But obviously this thing is bullish and it's overbought, so it can remain overbought for a very long time. I'm not looking for it to break down, but it doesn't mean that it isn't going to. All right, so you can clearly see you're forming that descending or ascending wedge. Let me see here if I can get it there. There we go. So yeah, ascending wedge. Some people will call that a bull flag. A bull flag is when price trends lower and then rips. That's a bull flag. This isn't really a bull flag. It's more of an ascending channel or an ascending wedge, whatever you want to call it. Anyways, not a pattern trader, but a lot of people are. And so far this year, those patterns have been working out pretty damn good, as there's a descending wedge right there, typically looked at for bullish breakout potential. The SNB, or the Swiss National Bank, sorry, this is Aussie dollar, my bad. The RBA was expected to hike interest rates from 4.10 to 4.35, so a 25%, 25 basis point rate hike. So obviously price got really bullish coming into that meeting. Then we got the meeting, they hiked, and then price got really bearish. Why is that? Well, it's simple. The move to the rate hike, which was highly anticipated, highly expected, was bought prior to that happening, right? If you know they're going to raise interest rates when you're trading at a objective support level down here, then one might get long. You also formed a descending wedge formation, which also would give buyers the opportunity to say, hey, maybe this is the low, or at least when this low was put in, hey, maybe that's going to be the yearly low. Let's buy that because we know that they're going to increase rates, and boom, the move goes higher. So most people, retail traders, will wait until the news happens and then make our decisions based on that. Whereas professional traders make their decisions prior to. Now, this was a big discussion in the Sunday live stream that I do for channel members and Patreons only. So basically we were talking about this, and the way that we discussed it was there's two things that can happen, right? Obviously, there's always two things that can happen. You can either sell into the move because retail is going to expect it to go higher based on the fact that they have raised interest rates, whereas that move's already happened. So I would expect more of a pullback. So I would look to sell into that move. Those are my exact words. And then I said you can either do that via pound Aussie or Aussie yen, because you want to do that with weak currencies, right? But it ended up working better on the Aussie dollar. So you have that. There's that, right? Let's go look at the pound Aussie real quick. GBP AUD, and that's only because the pound was strong. So if you're looking to sell pound Aussie, you're doing it based on you're looking to sell the Aussie. That means you're looking to get long pound Aussie, right? That would be selling the Aussie. So if you get long pound Aussie, then you would be okay. That move didn't play out as good, like I said. And then even if we go look at Aussie yen, we'd be doing the same thing, right? You'd be looking to buy, or no, you'd be looking to sell the Aussie yen, hoping that the yen carried on with the strength that it had the day prior. But it didn't really do anything there either. So the obvious move, in hindsight, was to look for the descending wedge formation breakout, because that had much more of a bearish reaction than anything else. Now, with that being said, you have created a higher high, you have broken out, and you have created a higher low, a higher swing low. So that monthly support level that is an objective level, I would watch that level. Here is your monthly support. All right. It's the lowest bearish close until you broke down and closed below it. And that's this candle. So yeah. And you're trading really close to last month's open, which is another objective level to keep an eye on. So basically what I'm trying to say is if we continue to see dollar pull back, right, continue to see dollar weakness, which we've gotten dollar strength the last couple days, but on Friday, during that non-farm payroll number, the dollar broke down from its bull flag. This is a bull flag, right? So you broke down from that. Now, I was very cautious with this move because I'm still dollar bull while it's trading, above 103, because that's the yearly opening range. But as of right now, it does look like it is trying to hold resistance. So one could look for longs on Aussie yen, Aussie dollar, Euro Aussie, stuff like that. Euro dollar is trading at an objective resistance level right now. Will it act as support? We won't know. But a way that you can trade it is simple. You can wait to see if at the 9:30 bell, do you get a lower low, and then do you reject that low? If you do, buy it. Put your stop under that low. Now, it's bearish on the day. There is the bell. It is bearish on the day. So typically you look for the day trend to continue in FX, but it doesn't always happen. Sometimes you'll set a higher low in the Asian session or the London session, and then the New York session will reverse the trend. But as of right now, I can't short this because it's at an objective support, right? You see it held there, broke down there, but then we're starting to accumulate around that area. So this could be an area to get long, stop under there. You take profits would be the resistance up here, 106.925. That would not give you a 2-to-1 risk to reward. That would give you about a 1.5 or a little bit less. So it's up to you how, if you want to trade it, how you want to trade it. Just understand it's about managing your risk. It's about how much you lose. It's not about how much you win. Now, with that being said, let's pull up the small portfolio. The portfolio that we are being 100% accountable on has been walking backwards. I can't win them all. I wish I could, but I just cannot do it. So far, the trade that is leading the pack is the TLT. I believe I posted this on Twitter and actually got made fun of it, kind of. Let's go look at that because, people just don't understand. It's funny to me. All right, so right here, yes, pull back, my friend, so I can buy you TLT. That was on this bearish day right there. You can see that was a nice bearish day level that what we were watching. And then I was also watching the open and close of that daily candle as well. And then, people in their infinite wisdom, why would you buy U.S. debt bonds if they can now buy gold for the same purpose? U.S. will inflate any returns on bonds before people make $1. Well, semi-solar, to you, my friend, I say, I've made $85. $85. Not $1, 85 of them. Now, I know that's not a lot of money, but it's a small account. It's $5,000. And that's better than a 1% move. But I do want to show you this move. So this was the day I posted it. It pulled down to where? An objective level being this day's open. And boom, up she went. So I got long via options. I didn't buy the bond. I didn't buy the underlying. I don't care about the underlying. I don't care about anything when I trade options. I don't care about anything when I trade it, period. I have a long portfolio where I hold stocks long, but I don't do nothing with that. I very rarely even log into it, right? I don't care where it's at. I'm holding that forever anyways, right? So why even look at it? The only time I intervene is when I'm buying something or adding something to the portfolio, or sometimes if I need, to get money out and most of my margins tied up in all my other accounts, then I'll take a little bit on profits and get some money that way. But anyways, I'm just saying, I don't care about the underlying fundamentals of this asset. What I care about, is there a technical setup? Yes. Can I make money on the options if I buy them? Yes. Did I? Yes. Should I take profits? Yes. Why? Because it's at resistance. All right. That's as simple as that. It's at resistance. So basically, I'll watch to see if, as long as it can create a trending day and stay bullish on the opening range. This is your opening range right here. As long as we don't drop and lose that and continue to go lower, I'll go ahead and take profits because I'm up over 1%. So if I keep my losers at 1% and continue to take profits when assets are trading above 1% in profit, guess what? As long as I have a 50-50 hit rate, I'll be profitable. But anyways, that's what's going on with the TLT. S&P 500, I haven't done any levels yet. Obviously, NASDAQ is super bullish. There is no point to short this. I know every single retail trader out there is probably trying to short this thing yesterday, trying to short it the other day. I did by selling Microsoft or buying a Microsoft put spread. No, that spread is getting killed right now. So, yeah, even though things look like, hey, this is a 4 standard deviation move, bro, it needs to pull back. I agree, but it doesn't mean it has to today. So the way I will work this position is right here. I will wait to see until it gets to $60 of P&L. This is P&L on the day, and it is incorrect. I have not lost $71 on Microsoft today because I wasn't up $30 yesterday on the trade. The trade never went into profit. It was always in the red because Microsoft really never sold off yesterday. So I'll hold this until it gets to roughly around $60 in the red, and then I'll close it. That way I'm keeping control of my losing trades, and I let my winning trades run. Boeing has been literally like the lifesaver of the account. Literally, it's been a really good trade, and I'm glad it has been. So basically, looking to get long Boeing down here. Not long after we got long, there was an analyst upgrade. So boom, 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 gave it a nice bump to the upside. Yesterday, we pulled back to support. So I was going to close it yesterday before it got under $60. So that way I'm maintaining that 1% win or loss. But I noticed the daily support was there. So I held on to it and it bounced. So as long as it doesn't start to trend back down that way, I'll keep the position open as long as it's trending to the upside. Because if I get under $60, then I'm no longer maintaining that 1-to-1 ratio, because I do have a better hit rate than 1-to-1 or a 50% hit rate. I have a better than that when I don't play with the futures. When I play with the futures, that's when I usually kill the account, all right? When I do what everybody else does. Oh, this thing has to pull back. It's been going up forever. And then I get stopped out. And then I try it again and I get stopped out. You know what I'm saying? So yeah, there's that. I want to show you the ugly ThinkorSwim icon real quick. The new one. See, I had a bug in my computer, and the only way to fix that bug was to basically reinstall. That's what it looks like now. It's no longer green. It's like a dark greenish blue and then blue. It's ugly. Ugly, ugly. Ugly, ugly, ugly. Anyways, I got to open that platform up. I can get the information that I'm looking for here. All I got to do is type in SPX, go to trade table, let it load. Let's go ahead and close ThinkorSwim. Let this load and then go to today's expiration, which is the 8th of November. There's a 16.6% implied volatility, giving us an expected move of $15 up or down. So the ranges are getting smaller. $15 up or down. So basically what we would do is we would go find the open. 345, that's going to be right there. The close of yesterday. I need to pop this open, don't I? That might help. The close of yesterday, $43.97. And we can simply add $15 onto that. That would give us $44.13-ish. So let's go up, because this is the expected move. We'll just use a calculator to make sure we're right. 43.97. $44.12. So I was off $1. Big deal. Go back to school, you retard. All right, so there's the top edge of the expected move, and apologies on that word. I shouldn't have said it. It's very bad to say that word. And then you would do the same thing to the downside, 43.97 minus 15. 43.97 minus 15 equals 43.82. And that's your expected move low. Now, these are areas that you can take trades at. Will it work every time? No, it will not. All right. It's just an area that the options market is expecting the markets to move, but the options market has failed tremendously in pricing in the markets for this week and last week. They failed epically. So they don't always hold. Manage your risk. When I take a futures trade, I look on the S&P 500 or the macro S&P 500. I usually look to take anywhere between a 2 or a 2.5 point stop. That would mean $2.50. Good mornings, good morning, good morning, good morning, good afternoon, good afternoon. He's taking any trades on Tesla today? No, John, I got long on Tesla yesterday. Let's go look at it. Yesterday, I got long on Tesla when Tesla was trading down here. Why? Because that's the highest closing bullish candle in this move up, and then you reversed. You broke through it here. You retested it there, and then yesterday you retested it as well. So I got long at 216.52. So if price comes back to that level, I'll close it, right? And I'll show you that trade here. Tesla. So that trade's up 27 bucks. All right. The reason it's only up 27 bucks is because I bought a call spread. I bought an in the money 37-day to expiration 215 strike call, and then I sold the same series December 15, 37 days out, 220 call. That essentially slows the trade down. You can see if I would have just bought the call, I'd be up $263. But what if it gaps down? Well, I'd be down $263. So it's impossible for me to manage my risk on just one call. Whereas if I sell a call against that call, it makes it move slower. See that? So the profits that I'm actually making is just the difference between the short call versus the long call. And there is a video in the description if you don't know what a spread is, but I'll show you here. That's it right there. So, yep, the risk on this trade is 250 bucks if it was to get away from me, or if I was to get exercised. If they exercise, because this is in the money now, if they exercise that, then that would cause me to lose probably the full amount. But this will cover me and make me, that would be the max that I could lose. And then minus the fees of exercisement, whatever that is. I don't know those fees, but probably not huge. All right, so there's that trade. We'll let it run. It's good for 30 days, longer than 30 days. So it's not something that I have to worry about selling, anytime soon. The way that I view these things is simple. If it doesn't start to work out by today or tomorrow, I will close it. I will not let it go against me. All right. If it comes down in here, it'll get closed for a small loss. But I will not allow it to gap. I mean, I can't not allow it to gap down. If it gaps down overnight, then that is what it is. But Tesla is one that hasn't gotten the major lift like Netflix, like Nvidia, like Microsoft. I mean, look at that move on Microsoft. Just insane. Like Meta, Goog. It's also not moving as much. Apple, Amazon, like all those Magnificent Seven stocks have had a massive rise to the upside, but not Tesla. And the reason I got long yesterday on Tesla is because he just announced, or Elon announced, Grok, his new chat GBT. I figured that would probably give Tesla a little bit of a bump, seeing how that's the only stock you can trade right now that has anything to do with Elon. But it is, I mean, it did kind of, but We're not seeing any follow through on that today. So for you, my good friend, if you were looking to get long Tesla, you would not want to see a closure today below 220.25, as that is objective support. If you close today's candle under that, then that means you are definitely coming back to retest this, and more than likely coming back to take out that. All right. So that level will be watched strongly today. You could take a long at that level as long as it holds. I would watch at least at the very minimum hourly closes. All right. This is not a very good look on a intraday opening range. So far, there is your opening range for the day, and it's not good. Opening range high. And we'll set the opening range low. So what we need is price to get back in that range. And then if it gets above it, we would want to see buyers check 224.14, push it on up, right? That's what we want to see as we are long, or I am long. But we'll keep an eye on it today. Not in any hurry. So if you got anything that you want me to check, just drop it down in the chat. And I will give it a check, my friends. That's what I'm here for. We're here to catch a trade, not just for me to talk about how good of a trader I am. We're here to teach you. All right, so I'm going back to the on watch. I also got long shy because it's a 1 to 3 year treasury bond ETF, but I did it via call options because this thing barely freaking moves. So it's going to take a while. I mean, this is $81.06. All the way up here is just $81.22. That's literally 14 cents in that entire screen there. It's a slow mover. The only reason I took this long is because Stanley Druckenmiller made it public that he is very, very much long the 2 year. I can get long the 2 year, but every tick is a $7.80 move. And there are a bunch of ticks in bonds. But if you did want to trade it, it's ZT/ZT. That's the 2 year treasury note. And basically you would just find the support and get long. There you go. But each tick is a $7.80 move. So it's a pretty, you can get big moves out of this. Here's one. You see what I'm saying? That's a big move. That you can get big moves out of this. So you got to be careful. It is at a level of potential support. I don't even know if I have enough buying power to even buy one. Yeah, I do. The buying power effect is $1,267. So whenever something has that big of a buying power effect, you know that it's going to be a mover. I can't remember what that level is. Let's go see what that level is, and then maybe we'll get long the 2 year as well. Kind of double up on that position. Ooh, it's daily support. This candle would be support until you get a daily close below. So going back intraday, if the 2 minute looks all jagged, we'll probably go back to the 15-minute time frame. But anyways, as we wait for the platform is slow. It is slow. My internet is doing okay. So yeah, I don't like this. This is a tick. That's all it is. Tick, 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 tick. I don't like it when it looks like that. So We'll put it on the 15 minute. Let's do the 10 minute. Screw it. Why not? But if we get a retest of support and that support holds, then maybe I'll get long this too. But like I said, trading futures is what's really killed the account. If I just stick to options, I'd be okay. I've had $500 swings inside of this portfolio in a day, and that's not what you want to do when you're trying to grow a small account. This account does not come first. My main accounts always come first because those are the accounts that pay me, that I make my money from. So this count comes later, right? Secondary, doing live streams and such. So we'll keep our eyes on that. But these were all the things that we were looking at. Some of them worked out great and some of them didn't. Lulu, we were looking for longs on Lulu down here. I put in a standing buy limit order. And since it's such an expensive stock and the options are expensive, I did the same thing. I did a call spread and I never got filled. I wish I would have, as that was a nice move to the upside. United Healthcare, same thing. We were looking for longs as long as we were not closing daily candles under the green line down here. And that trade has worked out. The one that we were getting long, GDX, is the one that we actually took. Took it on this day right here based off of demand. And the next day, puke. So I ended up getting stopped out of that position for a loss. And then boom. But we're right back down there. So not looking so hot. That's based on dollar strength, in my opinion. Yeah, that was dollar weakness on Friday based on the NFP. But you've pulled back and you've priced that move back out. So GDX is probably going to roll over. So maybe if we get a pop back up to this level, I might be tempted to take a short on it. Let's see what gold is doing. Yeah, if we can get a pop today while we're live on GDX, back up to here. We will indeed do a put spread on that baby. Because you're trading under yearly opening range, you're back under the 50. That means you're going to be back under the 21 exponential. There it is in the yellow, dressed in yellow. All your major moving averages are structured bearish. The only reason I was looking for a bullish trade on it was based on gold. I figured gold would go higher if this thing that's going on in the Middle East escalates, and it is escalating. So, yeah, you would think gold and oil would both be shooting to the moon right now. But we're retail, so we're always late to the party, right? Your insiders, your Congress people, they're the ones that catch the moves beforehand. Like on LMT, right? They bought obviously prior to this is the day that it happened. Well, it happened on Saturday, and then we woke up Monday to a massive gap up. And it is escalating. So why is this thing not, well, I guess it is kind of still trending higher, but not like big time. And then this one really only got one good day out of it. So since it's back at support, technically you could still buy it, but I don't know. The more times you test support, the more likely you're going to break it. All right. My trading view is getting stuck too. Awesome. So it's not just me. Awesome. Good afternoon, Heathy digging. Okay, read that. Good morning. I see some daily divergence on the 1-day time frame on Bitcoin, which usually marks the top. That confirms downside risk if it plays out. I wouldn't say the word usually. It just depends, right? It depends on a lot of aspects. Because you might not have been a part of the last time that we did a live stream, but if you look right here, all right, if you look right there, and then I pull this up, You can clearly see the divergence. Right? You got bearish divergence here, right? This thing's making lower lows as price is making higher closes. That's bearish divergence right there. And we know it didn't work, right? So usually wouldn't be a word I would use. What I would say is it has in the past. That's how I would say it. Bearish divergence on the daily time frame has in the past marked near-term tops, but it doesn't always, my friend. It doesn't always. All right, so there's no divergence there. You could just go back and check. You don't have to take my word for it. Here was a divergence. There was a close and a higher close. Lower close there, or a lower. So you got your high there. And then over here, you got a lower high. Over here, you got a lower high. So you got a divergence there. Then you went on to make a fresh high, and then you rolled over, but it's no longer held the top. Because sometimes divergence plays out, sometimes it don't. That's why I bring it up when I see it. There's also hidden bullish divergence in that as well, but I don't really care about divergences because they're not objective things. I mean, I guess they kind of are objective things, but I don't have any back testing studies on how often it works, and that's what you would need. You would need to literally go back into time and history, all of Bitcoin's price action, find every single daily divergence, and see how many times it worked. If it works better than 50% of the time, then you can try to trade it. Right? If it doesn't work better than 50% of the time, then you don't. So that's just one way of back testing your theory. But yeah, you got an objective resistance right there. And I essentially said, if you're looking for shorts, this would be the area to look for them shorts. I was unable to take the short because I wasn't prepared, or it had already moved. That's okay, though. You got another hourly coming up. So as long as you don't close an hourly above this candle, you'll be okay. If this candle closes below that candle, but you got 2 minutes. If this candle closes back above this candle, then I would be less prone to take that short entry. Right? Just follow price. Price will generally tell you what's going on. Not always, but generally. So, and also you're trying to pick a top on a very bullish asset currently. Good morning. As you experience issues, please check your PC for malware. You are a potential target for hackers as you are an online trader. Don't click on URLs. I don't, that are shared in Discord and email. I very rarely click on any links at all. Mara, says Johan. And I have shit, what's its name? NordVPN. And of course I have a antivirus as well. But I mean, that stuff still won't stop a hacker. If a hacker wants me, he's probably gonna get me. But we'll see. I don't even open emails unless I know who it's from. And I definitely don't click on any links. For sure. That's good advice. I don't even do it on my cell phone. So when I get a text with a link, not clicking it. But thank you, my friend. All right, Mara. Mara isn't experiencing the same sort of bullishness that Bitcoin is, which kind of leads me to believe that either A, Mara and Riot is about to get a nice pop, or Bitcoin is essentially probably going to roll over, right? Because, you know, these things are miners, and if they're not getting that pop, they generally do. When Bitcoin moves, these things generally move too. We took a nice short on Mara the other day. Well, it's It's been a month now ago, but on this day right here, we took a short because this candle had not yet been priced out. So I was looking for a move down to price this candle out because on Bitcoin and Riot and Coinbase, all those had already priced that candle out. And since Mara was the laggard, I took the short on Mara, and within 3 days, I was taking profits on that trade. So, I mean, Mara is not looking great. It's at support, but it's, I don't know. I don't like it. Anytime something, like I said, if it's retesting support again and again and again, eventually that support's going to get broken, especially if it's making lower highs. Or even if it would have made a higher high and then came back, that would, to me, look even more bearish. But until you close the daily under 885, I don't know if I'd buy Mara. But if Bitcoin rips, which it probably will, because I guarantee you shorts are stacking up right now because of that divergence. And also you will have profit takers, as I was one of them, right? I closed to 1/3 of my long Bitcoin position. I closed 1/3 of it because it was just getting too big. So I took profits at 35K. It was my bullish target for the year. We hit it, I take profits. So a lot of people are probably doing the same thing, especially if they were in profits. It's a major level. So I don't like the fact that these things are not getting those pops that following Bitcoin. Coinbase kind of did. It had earnings. Let's see if what it did on earnings. Yeah, big beats both top and bottom lines. So it did get the pop, but obviously not the same time as Bitcoin. This is based solely on earnings. You got daily res right there. Yeah, I don't see anything. Yeah, just daily res. All right. So yeah, I mean, Coinbase isn't having a very good day either. Let's see where we are on the MES, because I might want to take a short, just one, just to try it. You never know if it gets up there. And it didn't get up there, but it looks like it would have been a decent short trade. But like I said, I can't short it unless it's at the area, unless it gets to the area itself. Now, this might not bode well for my Tesla long, but my Microsoft short might work out. The Tesla long still not great. TLT's still doing okay. MSFT's up $2. Not really doing nothing there. So what's the NASDAQ doing today? NASDAQ coming off just a little bit after taking out yesterday's high. So I don't know if that occurred on the S&P 500. It did. So I also put out a tweet that I was like kind of expecting yesterday, SPX right back up to June, but this was an older tweet. I posted it on October the 31st. I said, when I look at this chart, it's hard for me not to think that the market is just trading between CPI prints. So maybe a retest of October CPI is coming, seeing how we are just under May CPI. This was the May CPI high. We just got under that and then back above it. So I figured we would be coming back and testing October or June's CPI. And that's kind of where we are if you look at this chart. I mean, I didn't think it would get there in that quick of time, but it did get back there quick. So yeah. Good stuff. Good stuff. We'll see how it plays out here. It's right at daily res, so technically I can't throw a stop that high up there, right? That is a so if I got short now and put a stop at the high 96, that's a 10-point move. That's essentially what you try to capture in a day. With one contract, that would be greater than a $60 loss. Because it's $5 per point. So it'd be a $50 loss. This is $5 per point per one contract. If you trade two contracts, then it's $10 per point. So that's how you leverage up on the E-minis futures contracts. But they don't trade at the same price as the SPX does, or the SPX 500 USD chart, which is just a CFD of the S&P 500. So they all three have different prices. We'll just have to let the market work its way in. I mean, I can deal with this, right? That's not bad. But if Tesla doesn't start to pop soon, I will close that down. Because I thought it would gap and go today. But based on the fact that it has been lagging the rest of its magnificent brothers. If you get what I mean. I generally don't like to take longs when a market's already stretched out. But there's a huge gap here to fill. I mean, technically it has been filled as far as price has traded in that gap. So maybe the market doesn't need to fill the gap. You traded from 242.03 down to 230.58 in this mess here. All right. So price is already traded in there. Usually gaps, I don't pay attention to gaps unless they're like at all-time highs, like this gap. But it's also traded through over here. So it's like all-time high up gaps. I look for those to fill. But other than that, gaps do not have to fill. Tesla is just now testing daily support, so we'll see if it can struggle to close below that price. Looking at the opening range, I don't like what I'm seeing here. Also, it struggled at 225.95, and I shorted it on this day and made good money. So that day that I was down on the portfolio, like $225, I took a short. I just bought a put, a single put. I didn't do a spread. So this move down right here made the $225 back. And since there was a massive support level right through here, I closed the trade out on the low of day. And I'm glad I did, because the next day I would have been in the red. Ultimately, it would have been okay, but it's a big support level. I don't know why. There's only one candle that I can find on the daily that would cause it to be, and it's right here. Let's see that bearish close, and then you put in a morning star reversal. When you gap down, boom, right? That's a morning star reversal. So I guess that's why that support is so big, based on the fact that it put in that trap. So we'll see if it holds. It held yesterday, kind of. The day before, kind of. Well, it did hold yesterday because yesterday closed above it, but it was unable to close above this open. So we need it to get going here, or we're gonna have to close it down and try it again later. But yeah, with all the nonsense going on in the world, I wouldn't even expect there to be such a massive rally. The Fed said made the main thing that the Fed said that made the market pop, I assume, is when he literally said we don't think that there's going to be a recession. With the data that we see, we don't believe that a recession is going to happen. I think that is what's made the market pop, because he left the door open for more rate hikes, which would typically make the market bearish. Now, if you take that point, the fact that he did say that, left the door open for rate hikes, and also the fact that there's more short interest in the marketplace since 2012, that we got a short squeeze, right? We got a short squeeze. On Microsoft, we're already trading above its weekly expected high. We breached this week's expected high yesterday, which is why I took that short. This is almost a 4 standard deviation move in 2 weeks. I can show you if I pull up ThinkorSwim. But I think I can just simply show you by going to Twitter. Yeah, right here. So this is Microsoft. You can see this was the weekly expected move high last week. And this is where you closed, above 350. Oh, that's definitely bigger than a 2 standard deviation move. So then at the open of this week, this was the weekly expected range high. Today we're trading, we've already made fresh highs. So we're trading up in here. So yeah, eventually when you breach the expected move in such a manner, you do eventually expect a pullback, right? I mean, a snapback function is built into price. Elasticity. Elasticity. I don't know how to say that word. Anyways, I know it. My brain cells are cooked. Let's go to Brian wants to look at WBD. Warner Brothers. No. It just it missed on earnings. Massive gap down. It barely got an underlying beat. I don't know the extent of what was said during the press conference, obviously, but the market did not like it. What is that? The market did not like it. 965 is your yearly opening range. So maybe if it tests that, I mean, technically you are testing a demand zone right now. So it might be worth a scalp just to try to get a nickel or two out of it. But I mean, that is you're literally trying to catch a falling knife. And that's got momentum also. Boom. I mean, you opened, went up just a little bit and dumped. That's called a gap and go. That's because people were stuck long. They were stuck long. It got a nice pop off the yearly opening range, then had bad earnings and sold off. So you essentially priced out that entire move. So watch this price. It is an objective level to take an entry off of. Let's check the options on it. You got a dividend coming up. That won't affect you if you're long options. It will affect you if you're short. Yeah, the spreads are tight. 65, 61. That's not bad. That's a 4-cent wide spread. Yeah, you can trade it. But with the sheer momentum it has, I don't know that I would. I got I got 1 day trade now, so I can take another day trade. But I like to reserve that for stuff that I have a really good feeling about. Once again, small account, right? You got to maintain 25K in the account in order to day trade the way. But since you could trade futures, you can trade futures as many times as you want in a day. I haven't traded at all today. 0 trades up there. And Riot. ADA. All right, let's look at Riot. Well, let's get the arrow back. Riot, and then I'll look at ADA for you, my friend. Yeah, Riot's doing the same thing. It's coming off, so that Bitcoin short might be in effect. So we'll see if we can't get a short position opened on Bitcoin in the next hour. I don't see anything until 9:55 or 9:58. You've got these 3 candles here. So technically, you could potentially find support at 1020. What at 1021? Maybe. And it is testing the 50. So, I mean, this is a trade that I typically would take. I wish these moving averages were structured under it. If that was the case, I would definitely get long this right here where it's at, or 1021. But since the moving averages are structured bearish, since you got a death cross right there, this could all be a trap. All of this price could be a trap. This thing could dump. All right, so be careful. If the moving averages were under, like if your 50 was here and then your 100, which is blue, was there, and then your 200 was there, then this would be a trade that I would take every time. Retesting the 50. But it is what it is. The moving averages are not structured bullish. If it is going to, I mean, Bitcoin would literally need to break out and head towards that $41,000 level in order for this to be a higher low sequence, because you do have somewhat of a trend here, right? Low, higher high from that high, then a higher low, then a higher high from this high and that high. So this could end up being a higher low, but just remember your moving averages. They're structured bearish. And that's not how I would draw my trend line. I would draw it like that. Keep those wicks inside of it. So that way when you break down, you know you've really broken down. But that's Riot. Could you take a day trade scalp on it? Yeah. Yeah, you could. Opening range is terrible. So that's what I'd wait on, Johan. I would wait for price to get back above this, and then I would look for pullbacks into it and look for longs. To kind of validate your thesis, you would want price trading back above the opening range. Because as of right now, the way it stands, even though you're retesting the 50 and everything, as long as you're trading under the daily opening range, then it's moot. Now, some people use the first 15 minutes for the daily opening range. It's subjective, your daily opening range. Your daily opening range is just going to be whatever time frame you're looking at. So if you were looking at the 15-minute time frame, this would be your daily opening range. Much bigger. I usually just look at the 5-minute. So that's what I would need to see on Riot. Because right now all I see is selling. And then let's go look at ADA Cardano. I can't remember if this is one Brandon likes or hates. And I typically like to listen to Brandon when it comes to alts because he's done a lot of research on these things and knows quite a bit about them. I don't know why he hasn't been posting on YouTube lately, but maybe he got busy with family or work or whatever. But yeah, he's really good at finding these things and knowing which ones are good and which ones are not. The move has already happened. Obviously, this is where you'd have been looking to be a buyer because that's your yearly open. So I preach about this level every single time we have a fresh yearly open. That's the way I watch trend. Typically, if you're trading above it, you're bullish. If you're trading below it, you're bearish. But also I include, those for intraday day trades, the daily 21 and the daily RSI 50. But I mean, you're going to be overbought here, obviously. You're not printing any divergence yet. Could it go higher? It could, because you could liquidate that wick and then roll over. I have support at 32.73, near term support. 32.82, sorry. Near term support at 32.82. So even if you fib this, I mean, that would be in a resistance level, but you would have to fib it to the downside because to get an accurate reading, because you made a fresh yearly low. So that's the way I would do it. You're checking the 618 retracement of this major move from swing high to swing low. You're testing the 618. But there's an objective Heath level right there, supply zone. That's already been tested. So I wouldn't look at it to hold as resistance anymore, because when you traded through it right there, you essentially knocked that supply out. But I mean, it stopped right at it. Right at it, man. Look at that. Just boop. Yeah, if I was looking for shorts, that's where I would have been looking to short it. Even though it was retested, there's not a fresh level in there to look. That's the last one. So that's what I would be looking at. I wouldn't be a buyer unless you pulled back to there and held on a daily closing basis. Then I would buy the new daily support, whatever daily support is formed around that level. So it's difficult for me to say that and explain it because people don't really understand. But I'd be looking for something like this, right? And then like this, and then like this. Then I would be a buyer. And then I would want to see that. You see what I'm saying? Something like that. But this would have to build in support here. So I couldn't buy it like on a first test. Bing, buy it. No, I couldn't do that. I would need to see support build in there. So it'd take this wouldn't be a trade potentially for the average true range of these candles, at least 5-6 days. But if these candles slow down, which they more than likely will, this could be a week to 2, maybe even 3 weeks before you get back there. That's generally not how crypto works. I mean, when it dumps, it dumps. That doesn't look like it's dumping yet. But a lot of alts are moving. So let's go check dominance on Bitcoin. I don't have it there. I must have left it over here. Where are you, Bitcoin dominance? I don't have it anywhere. All right, so let's just see. Yeah, the dominance on alts is still good for Bitcoin. I mean, it's having a pullback, so that's probably why you're seeing some alts pop. But I mean, clearly Bitcoin dominance is up. This isn't a tradable asset, but man, what an entry there, huh? If it was perfect, but it's not. So yeah, that's this little pullback right here is why you're seeing alts pump. I mean, if you measure the days, it's 14 days. So for the last 2 weeks, it's been pulling back. And I'd say the Cardano pump is about 14 days. It's 20 days, so it started its move a little bit before. But it started to move up with Bitcoin. So, I mean, will it continue? I don't know. I'd say you probably, if you get above that high and you close above that high, then yeah, you could probably see bullish continuation. But I would definitely want to see like a higher close, a higher close, a higher close each day. I don't want to see just one daily close above it because you could get this, right? One daily close above and then boom, boom, you're right back under. I don't like that because that's a pretty big breakout area. To get a bearish reaction like that. It's not a huge bearish reaction, but it is a bearish reaction nonetheless. And you were unable to close above that. That's why, like I said, near term today, especially with the dollar up, but the dollar is losing its strength. Look at that. Which chart did I post in the chat? It was pound dollar. Let's go look at pound dollar. Yep, it's holding. Should have taken it. It didn't give us an entry. You would have had to buy it right in here. So you're not up very much if you took it. But it is kind of holding. Good morning, Rum Mountains. Take profit on my long for link today from 565, looking to buy back on a pullback as we are going to resistance now. Your thoughts? Let's go look at it. And good job on taking profits. People trade and they forget to do that when they're winning because they think they're going to continue to win forever. They forget that these things don't trade straight up or straight down forever. This is just the process of breakout. Like, the longer the consolidation is, typically the bigger the breakout is. Oh my God, I did all that and was very... So that's pretty close to a measured move from the breakout. Not quite. Like you might could get a little bit more out of it. But with that range and this move, that's pretty close to a measured move. So a pullback would be the next available area of support, which is clearly $10.92. This is the obvious range. However, this bullish candle is your resistance. of that range. So technically one could look for a pullback potentially to there if you're going to get upside continuation, right? So the two levels that I would watch, my friend, 1164 and 1092. Those are the only two areas I could be a buyer. You got another one at 1030, 35. This close there. Yeah, I mean, that's a nice move to the upside there on Linkster. Nice move, 140%. You're into resistance now. You can see all this gobbledygook. So the lowest close on that would be there. This was a clear breakdown as you retested the next day and closed under it. Oh, this is a perfect representation of what I'm talking about. When I say I want to see something build as support, well, the same goes for short side setups. If I want to see something build as resistance, here's the breakdown. So at that point in time, I would definitely be watching 1364 on closes. This candle closed here under it. So I would definitely be willing to take a short on this day. Any retest and fall back under would be a short entry for me. And then on this day, like if you would have waited for it to fall back under resistance and then get short, though your stop above the high of day, you know, there's always a chance that the next day can stop you out. But that would have been a beautiful short. And you wouldn't have gotten stopped out. And you would have nailed a pretty nice move to the downside there. So, but you can see that that's clear support and it acted as resistance. And you're trading at it now. So let's see how today closes. But yeah, your run is probably getting close to done. It just depends on what Bitcoin does moving forward, right? I mean, you're max overbought over here, and you have been for several days. So yeah, this short's getting squeezed. Looking at the bearish div happening here. I mean, this is clear bearish divergence happening. You're making lower, 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 lower. And on candle closes, you're making higher, higher, higher. There's perfect bearish divergence happening. And then boom. Give them one more shove. And then they go down. So your squeeze is probably done at this point. Now what you need for bullish continuation is sheer demand. Like there needs to be just demand for this product. Once again, Link is another one of those that I just don't know what it does. I know a lot of people loved this thing back in the 20s and the early 2019. Like Bitcoin was bearish and Chainlink was just rocking. I remember all that. So yeah, you need demand for it. I don't know what it does. If it's had a breakthrough in technology or something like that, then this could be a legit demand spike. But it could just also be a sympathy play off of Bitcoin. All right. WDB long, we looked at it already, Brian, and I said what I said. I mean, we even looked at the options. And since you've pushed lower, so we were just testing 980 when I spoke about it, and you got a lower push here. When I was talking about it, we were just testing it. I think we were on this candle here. There's your breakdown. So see if it holds. You close another 5 minute under it, I would leave it alone until 965 and then see how it reacts there. That's your yearly open. And the entire span of this move is 10 cents. Well, 13 cents. So it's not like moving, right? Yeah, Tesla's not looking good. TLT's looking good. Tesla's not. And BA isn't either. BA's pulling back. I should have took profits on BA the other day when it was almost 100% gain. Because I just got, what do you call it? Greedy. I was like, come on, gimme. Just let me get it to 120 and I'll take profits. That'd be 100% gain. But nope. Would have been a 50% gain, sorry, on the option, but it would have been a 2% gain on the account. But it didn't give it to me, so I was like, I'll take it tomorrow. Because it had a lot of bullish pressure, so I was like, it'll go up tomorrow and then I'll close it out. And it didn't. It's been coming down ever since. On this day here, I was just trying to push it a little bit further. That's what you get for being greedy. But like I said, as long as 189.38 holds, then maybe this is just going to be a lower high. A higher low. Because it did get a shout out. I can't remember who did it. Let's go to FinViz and see if we can find out. Somebody just upgraded it not too long ago, but that can happen. Yeah. North Coast. UBS upgraded it to a buy. That's who it was. And Deutsche Bank upgraded to hold. Or not initiated, I guess. But 217 target price. Trading at 191. 217. That would be a nice move. So we'll see if it can get up there. That would be a pretty close to a measured move anyways. Where is my arrow? So that, and then we delete that one, and then we just pull this up here. Like that. Well, measured move puts you at 211. I would take profits at 211 if it gets up there. That's if. That's a big fat if. This thing is bearish. It just now popped back up into bullish territory, but if you slap your moving averages on, you're going to see once again that this is not structured bullish. This is structured bearish. So there's a heavier weight to the downside than there is to the upside. And typically prices will move in the direction with less friction, if you get what I'm saying. So it could be a buy, but it has been a sell with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 straight bearish weeks. Now, this could just be a shorts covering move. But the upgrade helped, that's for sure. Let's see if we can get a support hold on it. Good morning, Run DMC. Thanks for going over Tesla and your Tesla trade. You're welcome, my friend. I'm surprised you were so concerned with $20,000 gap. It's so far away, it's not much of a magnet in my opinion. No, I'm not concerned about it. I'm just saying it's there, right? Like my whole thesis for this year was we probably fill the $20,000 gap and then go up and hit the $35,000 gap and then trade sideways into the halving. But we didn't fill the $20,000 gap. That's all. It's just there. I don't feel that strongly about it. And like I said, gaps do not have to fill. Because spot price is generally what we trade anyways, and spot price trades 24/7. So, and on the spot chart, that gap isn't there. I don't concern myself with CME gaps that often. But when there's, when there's confluence like there was at the top end gap of 35K, that was also monthly support. I don't know if the $20,000 gap is any kind of support. But yeah, I'm not concerned with it. It can stay unfilled forever as far as I am concerned. Let's put it that way. Using weekly IV on some stocks, and I noticed that implied volatility moves through the week. Yes, it does. Should I be setting the IV at the beginning of the week and leave it alone or just through the week? Depends on what you're doing, Andrew. Like the measured move tool that I use with ThinkorSwim, it sets it from the beginning of... Here, I'll show you. It's actually... It actually sets it from the close on Friday. The close on Friday usually sets that that IV. All right. So here we are. Look at it. It's blue. Ugh, man. All right, so here is the that's basically all this indicator does, right? Is on Friday, wherever this thing closes, they calculate the implied volatility for the measured move for the next week. This does not move with the IV. It stays put. Whatever it is on the close on Friday, that is your measured move. Okay? So it just depends on what you're doing. Like for me, when I'm day trading, I get the measured move each day, right? Each day. So I would just simply go into the ES or SPX and then get that measured move for that day, like I did at the beginning of the stream. The IV's 19%. It was a $15 move earlier. Now IV's dropped. Well, of course it has because time has moved, but now it's only a $13 expected move. So if I go into the grid and drop this down $2 more, where would that put us? So that's 44.12. $2 more would put us at 44.10. So, I mean, yeah, IV moves, but it'll also increase if the VIX goes up, right? Like if the S&P 500 has a big, nasty crash and the VIX spikes, that will make the IV increase. So it just depends on what you're doing. So these two blue lines is the IV rank for the day, if you will. That's where the options market has priced the S&P 500 potential high to low. Now, when it says $15, that's not $15 from the low to the high. That's $15 up from the open and $15 down from the open or the close. So the IV would have been set on SPX's close yesterday, and then you just go up $15, boom, and then you go down $15 from the previous day's close, boom. And then that gives you a general idea of where risk is. Anything above 44.12 would be risk to the upside, right? That means you're probably going to see more of a squeeze happen. And anything under 43.81 means you could see a bigger or a deeper correction based on the fact that people that are selling zero DTE options, which just stands for 0 days to expiration options, are going to be trading right at these levels. You got it? So that's where fun either happens or no fun. So like if you short it at 44.12 and it pops up, well, you lose the trade. But if it hits it and rolls over, then you win, right? Same goes for that down one. If we get down here, this is an area where people will be looking to buy it. Today's only Wednesday. You got 2 more days. I'm not looking to buy it up here because A, you're at resistance. B, you've had such a magnificent move in the last, since Friday. It's an insane move to the upside. I would not be looking to buy up here because to me, it just feels like I would be buying the highs. And nobody likes buying the highs. You know what I'm saying? You get in long and then the market like dumps. That's never fun for anybody. Not for me, not for anybody. So it's just had an outside move. I mean, thesis for today would be a retracement. I mean, this is just on a 30-minute, 10-day, 30-minute chart. Because remember, volume profile should be used intraday, like on a daily basis. Because when you use it like this, you would have been looking to get short there at 15,271. No bueno, you got stopped out. You would have been looking to get short here at 15, because at that point in time, that's as wide as this thing was, right? But since you've had all of this price action above it, now you've set in new volume profiles. But generally, price will trade in a range inside of that. But so far, every near-term short thesis for the last 1, 2, 3, 4 days has been down. But everybody's been getting crushed based on that. Just based on that. So the original profile was here, right? From down here to up there. And then when we got a breach above 15K, it just kept going and going. And you made it almost a 15.5. Like, that's an astounding move. Astounding. Just absolutely wrecking people left and right. But today it seems to be having a slight pullback. This is a 30-minute candle. So, yeah. And here's NVIDIA hasn't hit the top edge of the expected move yet. MSFT is just absolutely insane. Absolutely insane. This breach. Usually when you get a breach this big, you do get a pullback of some sort, whether it's 1 day or 2, but you haven't. You haven't printed a red candle since the breach of the weekly expected. And then this is Friday, So this is where it took the weekly expected, right? The whole week expected move was such and such dollars, 10, what is it, $12 to the upside and $12 to the downside. You've already breached it. It's like insane how much buying has came into the market, how quickly and aggressive that move is. Which leads me to believe it will not sustain itself. Right? It will not sustain itself. Now, I was expecting it to get higher and take out this swing high, because we see that oftentimes when price is trending lower. We can go right back over here to the S&P 500 and go back to the bear market of 2022 and look for ourselves when it decides to pull up. So bear market 2022, you can see that, right? This is something similar to what we're witnessing now, is it? And what did it do? It just ran right above this swing high and then rolled back over. So today we might get a little tiny range like that, and then tomorrow we could get something like that. At least one would think. But this wasn't a very volatile move to the downside, was it? Not compared to this. I mean, the size of the candles is what I'm talking about. They're much smaller, these bearish candles here. I mean, we were getting close to the all-time high, and then CPI started to tick up. But if oil remains low, this is when we get our next CPI print. If oil remains low, I would expect CPI to come in line with last month's, if not a little bit lower. We knew CPI was going to tick up from 3 to 3.2 based on the oil move, because the Fed said oil, every $10 move in oil increases inflation by 0.2%. That's the headline number. That's the main number that everybody looks at. The inflation rate right here. Right? So it's ticked up. We're still at 3.7. And this is the Fed's target, 2%. So, I mean, if you think about how far it has dropped, there for a little while, July and August, it wasn't really moving. There for 3 months, it was barely moving, but then it started dropping hard. That's when risk markets really took off. And I was telling people all year, since the peak was made at 9.1%, I said, as long as CPI starts to go lower, risk assets will start to go higher. And they did. You could have been a buyer on most everything on the first of the year, and you'd be up huge this year if you bought risk. And risk is just those 7 stocks. That is literally what is holding the market up. These stocks. I put Netflix in there because Netflix used to be part of what they called the FANG group before Tesla was in the S&P 500, right? They used to call it FANG, Facebook, Apple, Netflix, Nvidia, Google, but they're not including Netflix in the Magnificent Seven this year. But I include it because Netflix is also a big stock. It's just, it had a massive drop on the bear market. Massive drop. boom. Like it started its drop about pretty much the same as everybody else, but it dropped big time. I was like a buyer of Netflix when it was down 77%. Like for sure. Of course, you gotta be, right? You got to be. Without leverage, you just, when you're investing, you don't apply leverage to your investment portfolio. You just buy shares on companies that make money. Let's make that clear. My one wild card in that portfolio has literally gotten absolutely wrecked. This is my one wild card that I put in that portfolio, and I bought it at $10, and it's trading at $1.57 today. You know why? Once you drop under $5, investment firms, banks, anybody that manages money, they have to close their positions. They're not allowed to hold anything sub $5 because anything sub $5 is considered a penny stock. No matter the float, it does not matter how many shares it has. If it is under $5, legally they cannot own it. So that is why you've seen such a massive drop from $5, because all the funds had to sell it. They had to get it out of their portfolios. So that really, really destroyed this one. But this was just a small portion of the portfolio. It's not dragged it down or anything like that. When I allocate a new asset to that portfolio, it's a very small percentage of the overall portfolio. You can't put more weight on one specific stock. Otherwise, your portfolio will outperform either to the upside or to the downside. And typically, that's not what you want. You want a nice, steady, ascending equity curve. So, yeah. Good morning, man. When do you think ETH and layer 2 is going to start ripping? Well, I would assume the ETH would have ripped already. ETH's got a little bit more resistance than Bitcoin does right now where it's currently trading. So, like, you don't really have that. Like, there's that monthly support that we're looking at on Bitcoin. ETH hasn't even reached it yet. So I'm not sure what's going on with ETH. And also, you can just check ETH BTC to get an overall feel for the strength for ETH. And as you can see, Bitcoin is clearly beating ETH. It is clearly stronger than ETH. Which, you can just look at the two charts and see that, right? Bitcoin is tagging monthly support. That's what's actually acting as resistance right now, this monthly support. That's the big, big level right there. So we definitely need to see it break out and get a similar sized monthly candle. But, it could consolidate like this for weeks and then go. Who knows, right? And also, this could be the top. Because the halving isn't until next year. Halving tracker. Let's pull that up. Because it changes. That's not the halving tracker, dude. Dun, 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 dun. Early to mid 2024. The last time I looked at it, it was one of the M months. May or March. I can't remember. I'm thinking May, but someone I think has bumped it up to like April or May, June. I don't know when. But right now the market's pricing in the first rate cuts coming around June. So the end of the second quarter, or the beginning of the second quarter, sorry. So we'll see. That's way over here. Right? Way over there. It's got a long time to go. That's generally when you see Bitcoin really start to go. So for it to go now, I mean, I know there are a couple people on Twitter screaming all-time highs before the halving. Bitcoin has literally never done that. Ever. Ever. In its entire history. It has never made fresh all-time highs before the halving. So literally they're expecting something that has never happened to happen. And they're also expecting that during a tumultuous time. Like, we may be experiencing World War III in the next couple months. Nobody knows. Not only that, you're in a high interest rate, high inflation environment. So, like, yeah, not really good for Bitcoin. So I don't see why or how they're coming to that conclusion. There's no technicals that suggest that. There's nothing that suggests that other than made up charts. Really and truly, I don't understand it. Generally, once you hit your bear market lows, if these are going to be the bear market lows, then you will trade sideways back and forth until the halving, and then that's when you will start to see the ascent. So that's generally how Bitcoin has worked. But like I said, I would really want to see inflation back at 2%, and I would want to see the Fed starting to cut rates right around when the halving starts. If we can get all of that and the wars are over, right? All of that, then I think we could see another massive bull run on Bitcoin. But if we don't get any of that, then it's iffy. It's very much iffy. Morning, man. When do you think? Okay, read that. Can you take a glance at Energy Web Token? Yeah, first off, let me just say I don't know what that is, Mr. Newman. So I can't like explain the white papers or anything, what it does, but I will look it up. I don't like Kraken, so let me use KuCoin. You didn't ask for USDT. Literally crypto trading view, and this is the only one that doesn't have. Looks exactly the same as Tether anyways. It's having a nice little pop. Let's see how much of its total value it lost. Oh my God, it's going to be. See, this is why I don't like Kraken, because I don't know if this wick is real. I mean, it's real if it's on Kraken. It went up there, but for how long? That's the question. Yeah, 95% of its value it lost. So sure, right? I mean, people will take gambles on stuff like this, even if they don't know what it is. If it comes off 95%, yeah, why not? It's cheap. It's $2. Buy a couple thousand shares and just hold it without leverage. That seems to be what's going on here. Would I say a low is in? It's possible. But every single swing high has been sold into up until this point. Every single one. Every time this thing has gotten any kind of bullish momentum, it's gotten whacked right back down. So, when is this? October, it put in its lows. Yeah. I mean, I could be a buyer back down around a $1.67, but I cannot be a buyer up here. And let's just see how much it's moved in 3 days. 49, 50% move in 3 days. Not bad. And it's dropped 17% of that. So, yeah, I mean, I can't buy it up here. There's just too much resistance up here. Right there is another supply zone. It traded right up into it. Technically, all of these would be supply candles. Whenever you have an up move like that and then instant sell off, that's where the supply is. There was more selling happening in that day than buying, hence the sell off. So, I mean, it blasted through several of those levels and made it up to this one. So, what would be my percentage return if I just expected that? 21%. Not bad, but at the same time, there's really nothing setting here telling me to be a buyer. But I can tell you why it stopped. That's old resistance. So you've tagged old resistance almost to perfection today, just a little bit ago. Let it build in support, consolidate for a couple days, and then see what happens, right? Find your daily support, which would be the lowest bearish close, and then look to be a buyer there on a daily closing basis. That's the only way you could play it. But I don't know what it does. I don't know if there's news on it. Like they just broke some fresh code or something like that. Like in this scenario, if that's the case and it's not just getting a bounce because every other altcoin is, if it's not just a sympathy play, if there's a legitimate reason for this, then you could potentially be a buyer here. Because let's face it, $2 isn't bad to buy something that has traded up in the 20s. I mean, I won't even count these wicks, but you traded up to $18. I don't think it'll get there again unless it's like really good news. But if it was really good news, there would be a massive candle, right? A massive pump. A 50% pump in crypto is a big pump, but I've seen that in a day before with some of these assets. Like some of them have pumped. Yeah, 20-30% move in a day isn't nothing for some of these things. So just keep an eye on, for right now, 219. That's your last daily res until the next daily res, which is up there. 2.4. So right now you just watch 2.19. And as long as you can consolidate here for a few days, then you could take a shot at it. Did you set a stop loss on Tesla to at least secure win? No, I did not. No. Nope. I didn't. I did not. Let's go look at Tesla. Sorry, I was reading something. Let's see what it's doing. Still holding support for now. It did dig a little bit deeper there, but it's still holding support. I would expect this area to be resistant simply because you're under the 50. Whenever you're under the 50, this means you're in bearish control. The bears control the asset. When you get above the 50, generally that means the bulls control the asset. But there are traps like was here and here. You had control, but you lost it, right? So that's mainly why we're seeing selling going on. But I would love to see it fill that gap, as that would put me at pretty close to max profitability on it. Considering it's I don't know what you're talking about, Brian. On WBD, bro, I don't see how you could have made money on that. It went all the way to the yearly open, so you would have had to wait for that. You would have had to wait for that, and you'd have had a bottom ticket. That's yearly opening range. But good for you. All right. All right. Moving on. When does Powell speak today? I think it's 4 o'clock. I think it's 4 o'clock. No, it doesn't look like he speaks. Oh, he's speaking now, or no, he spoke at 9:15. He's not going to say anything we don't already know. We just had a FOMC meeting. You know what I'm saying? He isn't going to say anything that we don't already know. Technically, those Fed speaks don't really do much to price. Not a whole lot. Not a whole lot. The S&P 500 is literally stagnant. It's stagnant. We were only expecting a $15 move today, 15-point move. From the market high, which is 44.08, to the low is 43.87. I guess this would be the low, but that's yesterday. I'm talking about today. Yeah, when 15 points ain't much. Generally speaking, you're trying to get 10 points to make your day done, right? When I say day done, I mean if you can generate 10 points on the ES futures contract, depending on your account size, you can make your money and be done for the day. You don't have to set in a whole trade to wait for 10 points. You can do 5 points, hence the 2-point stop loss. And trading futures is just like trading spot Bitcoin or anything else, guys. And for you out there that, are Americans, Weeks is an exchange that will let you trade on the platform. Right here. There's money on the account. They don't have no KYC. So trading futures is exactly like this, except there's no leverage slider or anything like that. You're just simply, it's contract size. You figure out how much, your contract size you can lose, how many contracts you want to buy or sell, and then each tick it'll move, and you'll either make or lose money. And it's fun. That's why I got in trouble. Because it is so easy to do. Just hit buy, hit sell. You're done. In, out. And you can do it with, like I said, I opened this account with $5,000 and I can take 75 trades if I want. But those trades are expensive. To buy one contract, it costs 85 cents in commissions plus 67 cents. So that's what, $1.20, $1.40 right there. And that doubles with each contract size, right? Each contract you put on changes it. Now it's 134 versus 170 with just 2 contracts. So you got to keep that in mind too when trading. So generally what I try to do is I'll try to get a 5-point move, right? Try to nail my entry so that way I can get a 5-point move. If I got in at 43.91, I would be getting out at 43.97 right now. Boom, exit the trade and then wait for another consolidation or a pullback and then look to get in and try to get another 5 points. And that's it. You're done for the day. That's what I usually try to do. But I let things get out of hand on the live stream when I was trading the NASDAQ because the NASDAQ moves much faster. And I lost way too much money on that position. I took 2 trades on it, lost both of them, and all my options positions, except BA, were all in the red. So it totally destroyed the account. Totally destroyed it. I got to make a rule. Like if I'm in the red on the day, I definitely don't need to be trading futures because they're hard to trade, right? They whipsaw, they do all kinds of crazy stuff. What is this? Oh, let me pull this up real quick. Let's go to Flex Grid. Trade Talk. Yeah. This will change it up a bit. So intraday trading, you're coming up to the VWAP. The VWAP is the volume weighted average price. This is generally an area where day traders will look to sell. And then over here's your daily chart with the monthly volume weighted average price. There's the DXY. This is bonds. TLT, baby. Do it to it. Hell yeah. If the bonds keep rocking and rolling like that, I would say S&P 500 will close bullish today. And the dollar's moving down pretty big. So I don't know if I would sell that. I don't know if I would sell that. Look at TLT go. Typically, this is where I would take profits, but it's going. $122 isn't a bad money to make on a $5,000 account. That's actually decent money. So who's laughing now? I'm not really laughing, but I did also take this position in my main account. So, but I took my position in the main account for a longer term hold. I kind of did this too, because I think that bonds are going to rally. Continue to rally. I'm sorry. They're rallying now. This was your bear flag you needed to break down. You broke out of it. Can't buy it up here, right? You wait for the pullback. We pulled back into objective price. That's when I bought it. 86.68. Trading at 89.16 now. So you don't get a full dollar on the move with TLT. But that's a nice bounce. But it got absolutely murdered. Murdered. So we'll see. All those 401ks, like if you get a 401k and you get zero risk in it, they're just going to put you in bonds. My stepfather's portfolio looks like crap right now. He's down like 40 grand. I'm like, man, yeah, I would have probably told you to get out of bonds. While rates were climbing. This is a freaking waterfall. So I don't know. I mean, the near term should be doing better than the long term, but it just doesn't move as much. Well, the actual bond market does, but the ETF doesn't. See, it just barely moves, but it's moving in the right direction. It took me forever to get a fill on that too with options. I'm not buying the underlying. I trade the options because the options is a way to lever it up. Right? It's a way to lever it up. You can lever that bad boy up. But I didn't lever it up. I only bought one because I got so many positions on. This is a short S&P 500 call. I'm short the Jan 19, 72 days out, $4,700 call. So this can go against me by a lot and then just get a couple days of pullback and it'll be in profit. Good. Because I'm just selling time. High near looks good to long. Let's go look at it. Is that a crypto or BlackRock short duration bond ETF? Can you I mean, I know it's a crypto, but it doesn't look good to long time, not to me. It's already made its move. Let's look at the bond ETF or this thing. Yeah, it's not that. You're talking about the crypto. Yeah, no. Angry Bruce, you got to buy and support. This just broke support. Okay? You're retesting support right now underneath. This might be a short. Not a long. If it can't break back above 147, I wouldn't be looking to long it. Now, if it does break back above 147, then you can wait for it to pull back, and then you want to see something like that. If that happens, then maybe you can get long. But once again, you're looking to buy something that is already made a freaking from low to high, a 71% move. Generally, you want to buy things that are down. If you have, if you're convinced that the project is going to go up, right? If you've done your due diligence, your research, yeah, this thing can move when it gets moving. Such volatility up there. So, I mean, if you think that it could get back up to $2.70, then technically, yeah, you could potentially buy it, but I wouldn't buy it until it proves to me. Yeah, I mean, you can make 50% if it can get up there. That's the question. But I don't like to buy things that's already had. I mean, how many candles is that? That's like 8, 9 days of straight up. Then you have one day that's a pullback, and then 1, 2, 3, 4, 5, and on the fifth day, big strong move. There's a lot of resistance here, from here and there. So, like, I don't know if I would buy it here. Well, I know I wouldn't buy it there. I need a deeper correction. And at that point, I mean, at least pull back to the 50 and hold. This thing made bearish divergence as well. And you can see it's coming off hard today, or yesterday. Today looks like just a pullback from yesterday. And to be honest with you, if it got up to there even, 153, I would still be interested in a potential short. So just be careful buying things that's already made a big move. You want to buy them before the big move happens. You didn't really get a chance to buy it. Like, there was no reason to buy this. Even once it made a fresh higher high, taking this high out, it did not pull back into it to give you an entry opportunity. You would have just had to buy it and hold on. But nah, I would not buy in front of that. That's a pretty vicious move lower that broke support and took out this low. You're still trading at the midpoint of this candle. That's the only bullish scenario you got working for you right now. So watch this price. If you can close dailies back above it, then take a shot at it. But I don't think I would. Totally makes sense. Thank you. You are welcome, my friend. Is there anything else? Anything else? Get out of my face. There was a bug buzzing, but I got a gun for him. BA seems to be holding. Yeah, I want to see it hold that support. Ten-year's coming off good. That's what's helping the bond market. Those yields. But they generally do that, right? We breached 4%, and look how much of a correction you got on it there. We didn't. Yes, we did. We breached 5%, so it's only natural that we get another correction. But is that the top? That's the question. Is that the top? 22 days would be nice to see where we close. It would be great if that's the top. Because then we wouldn't have to worry about all the banks shedding their positions and getting stopped out, and then see this thing just go absolutely bonkers. And then where are we on the spreads? So we're still inverted on the yield curve, guys. This is the 10-year 3-month yield curve inversion. It's got to get back above zero before you see a recession. And then here's the 10-year 2-year, sorry. So it's almost got back to uninverted. Almost. We need to see those We need to see the 2-year and the near-term bonds come off quicker. Your 3-month is still sitting at 5.44. We need to see these things drop much quicker. But this is the product right here that Druck, Mr. Druck, is long. The short term, the 2-year. That's why I took a long on Shy. Only because my the small portfolio is too small to just buy and hold the bonds. Like I said, they move $7 per tick. That's your ticks right there. Each point that moves, that's $7.80 on this product. You could lose a lot of money quick. But yeah, this is what he's long, and I'm sure a lot of other investors are going to follow suit. But the TLT is a 20-year. Nice coming down there. TLT is the 20-year. And it's having a little bit of a pullback at 89.10. But it's a fresh high. So I think I'll hold it unless we close back under 88.48. Which means I'm going to obviously lose a lot of these gains. So those are the decisions that traders have to deal with, right? If this ends up becoming like the best trade of Q4, and this thing ends up getting back up to like $100 or $102, then I will be very upset that I took profits. You know what I'm saying? That's the hard part of trading. When to get out, when to get in. But what I could do is I could go ahead and close the position, right? And then just wait for another support test and buy it again. But on this isn't a spread. That's why it's making more money, because it's just one call. So like I can make infinite amount of money on this trade. An infinite amount of money if it continues to go up. There is no caps on that. So yeah, we'll see how it trades the rest of the day. If it looks like it's going to have a pullback, then I'll probably close it out, and then I'll wait for a support test at 87.59 would be the new support test, and as low as 86.78. This, if we break below this would invalidate a long, because you have to consider the gap fill, as that would be all the way to 85.35. And then at that point, you would have pulled back so drastically it wouldn't look good to buy, but I probably still would take a shot at it. So we'll see. That's the most difficult part. The rules say to cut profits once you reach 120, because we're sitting roughly at $6,000. We open the account with $5,000. We're up 20%. So whenever you make a 2% trade, you take your profits and run. So I'll probably do that, and then just look to re-enter lower. But we'll see how it trades the rest of the day. Any other questions? We're getting ready to wrap this thing up. Only 12 people still here. I guess we can go ahead and wrap it up. You guys have a fantastic rest of your day. If you're watching this and like the replay crew, then if you have a question, just drop them in the comment section as I read all comments. Thank you all so much for your time. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.